Hello, everyone, and welcome into crushthestreet.com. And as many of you have read and are familiar with Ronald-Peter Stoferle and his work, the In Gold We Trust reports, they have recently released their 12th annual report. And it's quite the jam-packed report with a tremendous amount of information, 200-page about gold, money, and inflation. And we're going to discuss the latest dynamics in the market with Peter. He is with the fund Incrementum AG. They're an independent investment and asset management company based in Liechtenstein. And again, we're familiar with Peter and his work, and we appreciate every time he comes on the show. Peter, thanks for coming on Crush the Street.
Thanks for having me again, Kenneth. It's a great pleasure.
Well, let's discuss this. Precious metals here, gold. The economy, seems to look good, right? You look at the reported numbers, and I know those of us who follow this stuff know that these numbers can't always be trusted. But stocks are up, real estate's up. The Fed's actually tightening, right? And Trump is instilling some confidence in the real economy. Now, I know a lot of people hate Trump because of whatever reasons. They have this leaning, this bias against him. But the money likes Trump, seems to be. So where does gold in this picture?
Well, obviously, gold is having a hard time. But I think that people are just expecting too much from gold. I know that many people jumped into the gold space in 2010, 2011, right at new all-time highs. Everybody expected gold to go to, $2,000, $3,000, $5,000.
It's like Bitcoin 20,000. Bitcoin is
right? Yeah, exactly. But we should not forget, gold is facing some headwinds at the moment. Stocks are doing really well. The real estate market all over the world is doing well. Bonds are still doing quite okay. The art market is doing well. Inflation is not a real concern yet. We're seeing rising rates and quantitative tightening. Trust in the financial system, in politicians, and in the banks is back. So, per definition, that's not exactly an environment where you want to hold gold. So I think gold is holding up quite okay because it's not the perfect environment for gold. But I think gold will really pick up momentum once those headwinds become tailwinds. So once recessionary fears come up, I think gold will have quite a run again. Of course, nobody's expecting a recession at the moment, but we should not forget that this is already the second longest expansion of the US economy. We should not forget that we're seeing rising rates, massive quantitative tightening. The Fed will reduce its balance sheet by 420 billion this year, 600 billion next year. And we should not forget that most economic numbers are as good as it gets. So I don't want to be the party pooper, but I think that this party, it's gonna be time to say goodbye rather soon. And I think you should join the gold party soon again.
Yeah, powerful words there. I was listening to, I had the TV on and watching CNBC, and I forget who it was, but they were talking about the possibility of a 20-year bull market. Is this possible in U.S. equities or in just the economy overall? I mean, is the millennial generation and the tech boom and what's going on with AI, is it possible to see a 20-year bull market in your opinion?
Well, of course. I mean, we have seen a 20-year bull market basically in the 80s and 90s. Of course, there was some corrections, especially 87. However, I would say that this bull market that we're seeing is mainly based on very, very cheap liquidity, low rates and quantitative easing all over the globe. Kenneth, let's not forget that in the last 10 years, the biggest central banks created 15 trillion, so 15,000 billion US dollars out of thin air. And of course, if there's more currency, more money, this leads to rising prices. That's, you don't have to have a economics PhD to come to that conclusion. But we can also see that this enormous amount of liquidity, this inflated this so-called everything bubble, and this makes the system much more fragile. Just one very interesting fact: the number of zombie companies is at the highest level in at least 20 years. Now, what's a zombie company? It's a company where interest expenditure is above the 3-year average of its EBIT. So of its earnings, basically. And at the moment, that's 16% of all companies on the US stock market. So even though we're seeing very, very low rates, we are seeing that companies are already struggling. So that leads me to the conclusion that rising interest rates are the worst environment that you can imagine for such a fragile economy, where everybody is dependent on low rates and cheap liquidity. And therefore, I think rising rates plus quantitative tightening, that's definitely the recipe for a recession and or for a crash on financial markets.
Wow. Yeah, it's definitely in gold's favor, and I guess people are a little frustrated seeing gold go below $1,300 once again, because it's just a psychological thing. It's another beatdown, because just right when you think that we're through the 1,300 and we are moving higher and going to gain momentum, that momentum is crushed. And I feel like every time that momentum gets crushed, the more confidence that we're going to need in precious metals to confirm that bull market. Because now, if it goes to 1,350 again, people are thinking, oh, it's probably going back to 1,250, in a couple months. Now it needs $1,100-$1,500 gold for people to say, okay, maybe this is a bull market. Any thoughts on just the sentiment that's surrounding gold and the confidence that needs to enter the space for it to do what we're all hoping it does?
Yeah, I absolutely agree, Kenneth. It's frustrating. But let's have a look at the numbers. Gold was up 13.6% in dollar terms last year. That's not that bad. Gold was up in basically every major currency, but in euro terms, it was down 1%, which is a pity for us over here in the Eurozone. And since the beginning of the year 2018, gold is down 3% in dollar terms. It's up in Australian dollar, in Canadian dollars. In euro terms, it's down 0.5%. So it's basically going sideways, I would say. But as I've mentioned before, it's not exactly an environment where gold should rally. Now, at the moment, I think the setup for gold is excellent. From my point of view, 1250 should be the low. We're seeing extremely negative sentiment. We're seeing a commitment of traders report that is excellent for gold, but also for silver and especially for platinum. We're seeing that seasonality from now on is getting better and better. We are entering the best seasonal phase of the year. And I can just see that if you're bullish on gold, you're getting kind of ridiculed because nobody is interested in gold anymore. And that's, as an investor, as a contrarian investor, this is exactly the setup that you want to see. Now, I've got no idea what the catalyst will be. Is it going to be emerging markets crashing? Is it going to be the dollar that goes lower again? Is it going to be inflation? Is it going to be recessionary fears? But from a risk-reward perspective, I think there's very little downside in gold, but tremendous upside at the moment.
Yeah, I remember what in going back to what you said about the the sentiment and the negativity surrounding gold, talking about it, it's almost a hard discussion to even discuss now because people don't want to hear about it anymore. But in my opinion, now is the time to consider it because it is hated in so many ways. And I go back to 2013, 2014, 2015, doing interviews about cryptocurrency, and nobody wanted to hear about it then. But arithmetically, that was the time to really get excited
Yeah,
about it,
yeah,
not at December 2017, right? Um, Even though I think we're still early and the technology, all the stuff that we say, but arithmetically, it was a lot better to be looking at Bitcoin when it was $100 or $200 than it was at 2,000 or 20,000. So yeah, and so I think that's what we need to consider here, and as us as investors, people looking at this, we need to consider uh, and control our emotions, control the psychology of what's going on with gold and it as an investment. Okay, so we see central banks, and this is something you pointed out in your in Gold We Trust report, being net buyers of precious metals, of gold.
hmm
China, Russia, India specifically. And one of the things that I've been talking about is this shift of purchasing power from Western nations to Eastern nations, these ones that are accumulating precious metals. So, having said that, what is your insight in regards to them being net buyers and the shift of purchasing power from west to east?
Yeah. Well, Ken, I just returned from a week in Kazakhstan. I spoke at a big mining conference in Astana, and of course, Kazakhstan. It's in between Europe, Russia, and China. So very very interesting country. The largest exporter of uranium. Big energy producer, oil and gas, of course, but also gold, copper, zinc, rare earth. It's a fantastic country, and it's been very very interesting talking about gold and talking about commodities with people over there. And for them, they are just constantly accumulating gold. Not only the central bank, but also private individuals, because they kind of distrust their local currency. They've got high inflation rates and so on. And I think Kazakhstan is one great example. It's not only Kazakhstan, it's also China, it's Russia. Russia just bought last month, I think, 600,000 ounces of gold. In the same month, they dumped 50% of their US Treasury holdings. It's India, it's Turkey, it's Uzbekistan. Yeah, it's so many emerging markets that are accumulating gold. Um, that's a clear sign of this de-dollarization that we are describing in the report. And I think the petro yuan, so the establishment of the oil exchange in Shanghai, I think that's another major turning point in this whole de-dollarization game. So, as our advisory board member Jim Rickards always says, if you want to play poker with the big guys, you have to bring chips to the table, and those chips are golden. So it's no coincidence that the US still holds more than 8,000 tons of gold, that the IMF holds more than 3,000 tons of gold, that the Eurozone, including the ECB, holds more than 10,000 tons of gold, and that those emerging markets where there's real growth, where there's real economic dynamic happening, that they're constantly accumulating gold. So I think the next crisis will probably not be a typical cyclical or financial crisis. It will probably be a currency or a monetary crisis. And if you study history, and especially financial markets history, monetary resets happen every couple of decades. So I think the next crisis will probably be bigger than the last one, because it's always like that. It's getting bigger and bigger. If you compare, 1987 or the savings and loan crisis to 2008, it shows you that it's just getting bigger and bigger. So from my point of view, there's not a lot of tools left in the toolbox of central bankers in the next crisis, because let's face it, in most of the countries, we don't have any room for significant for reducing, for lowering rates significantly. Historically, within the course of a recession, interest rates are lowered by 500 basis points. We would be in deeply negative interest rate territory this time. Of course, this would crush the whole banking system. There would have to be a ban on cash. So I think it's not a, for me, it's not a very bold call to say that the next crisis might be a monetary crisis, and that there might be the introduction of some sort of gold-backed multipolar currency. I think if you study the papers by the IMF, by the Bank for International Settlements, between the lines, you can already kind of come to that conclusion.
Powerful stuff. Well, we love Jim Rickards, and we've interviewed him a number of times on the show. Don't 100% agree with his Bitcoin opinion. I like Bitcoin a little more than he does, but definitely his insights on the economy, the central banking, and what's going on. It's very powerful stuff. But Ronald, let's discuss Bitcoin. I mean, we're talking now, Bitcoin has hit, the $5,000 range. I think it's $6,000 at the moment. What are your thoughts on cryptocurrency? I know you feel like, crypto and gold kind of go hand in hand and are not so much competition as they are competition to fiat currencies together.
Yeah, well, I would say from a philosophical point of view, of course, being in the tradition of the Austrian School of Economics, I just think that competition just improves the product, makes everything cheaper, and that competition is a very good thing. So from my point of view, competition also in the currency space totally makes sense. And we're coming back to Friedrich August von Hayek, who was writing about the denationalization of money already a couple of decades ago. So from my point of view, it is I would say that the rise of cryptocurrencies and the growing interest in blockchain technology, Bitcoin, and all the altcoins is mainly a consequence of our seemingly surreal monetary system. I think if you study the white paper by Satoshi Nakamoto, he clearly understands money creation and the flaws of our monetary system, the disadvantages. He understands the Cantillon effect, and he understands the stock-to-flow ratio. So I think he clearly refers to Bitcoin as some sort of digital gold in his writings. So from my point of view, I clearly welcome this competition that is happening at the moment, and I mean the sector is still tiny. I mean Bitcoin's market cap is, what is it, 140 billion at the moment, something like that. So the whole crypto space, I think at the moment, is 270 or 300 billion US dollars. That's a sizable amount of money, but compared to other monetary aggregates, compared to the equity markets, to some certain stocks, it's still fairly small, I would say. So from my point of view, from a philosophical point of view, it is fantastic that young people are discussing money again. What is money? Where does it come from? How should money be created? Should it be inflationary, deflationary? Is Bitcoin money? Is Bitcoin better money than gold or the US dollar? I think that's a very, very important discussion that is happening on the internet. It is happening at meetups. Young people are discussing those crucially important topics again. So from my point of view, I clearly welcome this development. I think there's enormous amount of resources, not only financial resources, but also human resources, talent going into this sector. So we cannot say how successful the whole sector will be, how many innovations will be coming out of that sector. But I think that there's room for kind of combining the oldest monetary technology, which is gold, physical gold, and the new technology, blockchain based. And there is quite a number of projects coming out quite recently. For example, there was the Perth Mint coming out with the project. Then there is Sprott with Goldcorp and IEX doing, I think, Tradewind markets. There's the UK Mint. There's quite a lot of established companies trying to combine physical gold with new technology. And as Peter Grosskopf recently said, every year since the 1970s, gold has lost market share to financial assets. And he thinks this gives it a chance to come back against those financial assets, this combination of new technology and old technology. And gold has always been criticized as being an inefficient product, a lazy product, a product that's hard to transact with. So it seems that the blockchain technology was kind of really invented for gold. The marriage of the two might become incredibly powerful because for the young generation, for millennials, they just won't go into a bank and buy physical gold. They won't go to a coin dealer and buy physical gold. They need modern and innovative ways how to buy, store, trade, and also sell physical gold. And I think there's quite a lot of great projects coming up. So from my point of view, cryptos and gold, they're not enemies, they're friends.
I like that. And I think the first person that opened my eyes to just that, it really articulated that for me was Rick Rule. He mentioned that competition of money, and I know he didn't invent that, but he kind of opened my eyes to the competition of money being a good thing. And because he wasn't necessarily all in terms of Bitcoin, but he just was open to say, hey, money and the competition of money is good, and so that's a powerful thing, and I appreciate that. Especially for somebody who's, heavily into precious metals, as I am, to be open to other things. And I think that's what's really important with anything in life, is to be open. As soon as you have such a defined belief in something, you're not open to learning, and that's so detrimental. I think in so many things. As soon as you define something so strong and solidify, you close off any opportunity to learn. And I just don't believe in that. And evolving, always evolving, always being open, and always being willing to go with the trend. So, Ronald, if you would please share some closing thoughts here, and let everyone know where they can get the report. I'm sure we'll have the links in the description area, and also about your company as well.
Yeah, thanks, Ken. Well, the report is available on our webpage. It's ingoldwetrust.li. There's altogether 4 different versions of the report. We've got the report in German and in English, and we've got a compact version for people that just want to read an overview, which is a snappy report, just 50 pages. And then, of course, there's the extended, or as we call it, the triple X version with more than 230 pages, where we really make a deep dive into what we call the three tides that are changing, the three monetary tides that are turning. So QE to QT, then the de-dollarization, as well as the technological turn that is tiding, but that is turning. But we also explain precious metals, our view on the failure of macroeconomics, financial repression, inflation versus deflation. We're having our technical view. We've got two great interviews with Luke Groman and with the nephew of Friedrich August von Hayek. We've got a chapter on possible crisis triggers and catalysts. We are discussing the portfolio characteristics of gold. So it's probably the most extensive, but also the most widely followed publication on gold worldwide. As I've said, you can download it for free in goldwetrust.li. You can follow me on Twitter at Ron Stoferle. We've got our company webpage, of course. It's incrementum.li. We are mainly a fund manager running 5 funds, mostly in the commodity space at the moment. But we're also doing private wealth management, and we've got the research department where we're publishing the In Gold We Trust report, but also the so-called sister report of the In Gold We Trust report, which is the crypto research report. We're publishing it on a quarterly basis. This is basically the holistic view that we are delivering in the gold report applied to the crypto space. Very, very interesting stuff prepared by my dear colleague Demelza Hayes, who is one of the brightest personalities in the crypto space. And yeah, that's all available on our webpage, incrementum.li.
Ronald, thanks for coming on Crush the Street and updating us and sharing your insight on the markets today.
Ken, thank you very much for having me, and I'm wishing you and all your listeners a great summer, and we all hope that gold will make a bottom and make us all happy going forward.
Amen. Thank you, sir.
Thank you very much.